Hello everyone and welcome to another accounting lesson. Today we'll be looking at an inventory valuation quiz questions. Alright, let's begin. Which accounting theory relates to recording inventory at the cost or net realizable value, whichever is lower? Basically, this is related to the inventory valuation rule or the inventory valuation method. So from recall, we have to know that it is related to the prudence theory. Right, next question. Uh, we can see that inventory is recorded at the lower of cost or net realizable value. That is according to the inventory valuation method or inventory valuation rule. Okay, next question. Any write-down in inventory amount is recorded in the inventory and an expense account that is also known as the impairment loss on inventory. Okay, next. After we have identified that inventory has to be written down, the accounts affected would be for us to definitely decrease inventory, and we also need to recognize an expense. Okay, and by opening up this expense account, we are basically following the prudence theory. In short, impairment loss on inventory account increases and inventory account decreases. The double entry to record the write-down would be to increase the expense, we would need to debit the impairment loss on inventory account. Okay, to increase the expense, we would need to debit the impairment loss account, and we would need to decrease the inventory account. So the correct answer here would be to debit impairment loss on inventory and to credit inventory. All right, next. If let's say there is an insurance policy that was taken up by the business, the insurance company would help to absorb some or all of the losses from the business. And when this happens, the expense that is incurred by the business would decrease because the insurance company would absorb this loss. And when the insurance company hasn't paid the amount to the business yet, there is a form of a receivable that the business would record. Subsequently, the business would receive money from the insurance company. So at this point in time, since the insurance wasn't paid yet to the business would record insurance receivable instead. Next question is about effects. If we do not record the write-down of inventory when needed, what will happen is inventory will be overstated. Alright, we are also supposed to subtract the impairment loss on inventory account. So if I am supposed to record impairment loss on inventory account, and we know that this impairment loss on inventory account is an expense, we are supposed to increase this account. If we do not increase this account, then the impairment loss on inventory account is understated or it is too little. There is no effect on cost of sales because the business is not selling any of these goods at this point in time. Therefore, for cost of sales, there's no effect, but impairment loss, there will be an understatement in the expense account. Consequently, there will be an overstatement in the profit for the year account. Alright, so if inventory is not written down, what will happen is inventory will be overstated, making the current assets to be overstated as well. As previously mentioned, we would also need to record the expense. And the expense account is impairment loss on inventory. So by not recording the write down, expense is understated. And if expense is understated, profit for the year will be overstated. And the effect on profit will flow over to equity. Therefore, equity will also be overstated. And we know previously that we are supposed to also decrease inventory. So if inventory is not written down, it will be overstated, affecting current assets to be overstated as well. Alright, thank you for watching this video, and I'll see you in the next video.